Okay. So let's move on with this. I apologize. The first thing I see here is that this uptrend needs to be broken. I'm not really interested, really, unless we get below 1818, right? That's the first level that really has to break. We have to get underneath that. But remember with trend lines, first of all, they can be broken very easily. Secondly, just because they're broken does not mean that we'll go to the downside, right? Quite often we see when trend lines get broken. Let me pull out my drawing tools here. Okay, oftentimes you can have a situation where a trend line gets broken to the downside, right? And then we'll come up, and one of two things can happen. We can either bounce along the backside of this trend line, or we break, retest, and then we have a larger break to the downside. Again, I'm not expecting to break to the downside, and I'll really have to see it get below this level right here in order to really be interested at all in shorts. I'd rather be looking to be a responsive buyer. Even last year, if you'll go back look at the days before Christmas, the pattern was this. So we did have a series of down days. If you'll look, get rid of that. Excuse me. And it looks something like this. Okay, so we had a series of down days that went like this, including coming into Christmas. But if you look intraday, only one of those down days actually closed at the low. And most of those down days, and again, considering that sellers were in control coming into the Christmas period, right? But most of those down days look like this, where we closed up like this into the middle of the range almost every day. And even on days where we closed on the low, the pattern went like this. And that was one day. Everything else looked kind of like this. However, the circumstances are different now, right? Obviously, buyers are in control. We had good news coming out from Apple. There's another one of the high flyers. I'll have to go and look up which one it is. Again, I don't track them day by day, but they're taking off. If you look at the overnight action, right, going back to the overnight range. Let's get back to this pointer here real quick. And I apologize for being so choppy again with the new software. It takes me a bit to get used to it and fluid with it. So before we do that, let's look at the 24-hour, right? On the 24-hour, if we break down the first level of support, and I will look to be a responsive buyer in this area, is right here in this approximately 1805, I'm going to guess, right in the middle here, right down to this level, between 1800 and 1805. I would expect responsive buyers the first time in there. The interesting thing is if we can get below 1800, which I doubt, obviously we do today, the first level of major support is all the way down here at 1780 to 1777. And if you'll look, everything under this level right here, this 1798, is really poorly auctioned. And just kind of looking at the bigger picture for a moment, the market likes to come back in and re-auction areas that are poorly auctioned. And it'll do one of two things, right? It'll either come in and reject out something like this, or we'll get a situation like we had here, right, where we traded straight through this area with almost no volume. But usually, what will happen in the norm, like in this area here, where we had poorly auctioned area, is that we'll just come back in and test usually about halfway, right? Re-auction it, and then later you'll notice when we came back into this area, even this was poorly auctioned, and the market came back up and re-auctioned it right here, right? Filled in that space. And that's generally how the market will operate. There's only one area left that's poorly auctioned, and that's right here on the 24-hour. And we didn't quite get down there on the Fed day. I imagine in the future, one of two things will happen here. When we get back to this area, the first time in, there'll be responsive buyers here. Anyways, that's not here nor there. We're not going to get anywhere close to that today unless something catastrophic happens. I seriously doubt it. We'll be lucky if we get any kind of measurable pullback. The overnight low is sitting right here at 1820 and a half. And I would expect at best if we get a rotation down, right, there'll probably be responsive buyers here. There's just not enough aggressive sellers in the market to really push us down. So again, into this 1818 level, unless we just get an early liquidation, people get up underneath here. It is possible that if we get underneath here, there will be a bout of profit taking. It could take us down first into this 1812 area, and below 1812 we really have a pretty good gap down into 1805, I believe, is the area below that. So let's go and look here real quick at the overnight action and see what that tells us, if anything. Okay, so on yesterday, this is the, just so you know, this is the trend on the day, right? We're going to see first this broken below 1822, 1820 area. This was the overnight low right here. Okay, and again, I watch both the 24-hour and the day time frame. On the day time frame in the afternoon, we have this uptrend going, but even below that, we have a larger time frame going back days. I can show this to you here real quick so you can see it. Okay, this is coming all the way back to this. This was the middle of this previous channel. It's now serving as the bottom of the current channel. Okay, and when you have a time for the longer a trend line is in place, the stronger it tends to be and the more respected that it'll be. Vice versa, once it gets broken, the stronger the break tends to be. But usually the breaks, if you'll pay close attention to them, they tend to go like this. They tend to come down, break, come back up, break, come back up, and then on the third one, the third break tends to be the ugly one. Sometimes it's the second one, but like I said, I'm not going to be very quick to jump on the short side. The other important thing is that we're looking for rotation still, right? Now, aggressive traders, we're probably not going to get a big rotation down, right? The range was pretty small overnight, 1824.5 to 1820.5. The gap is sitting right here at 1823 and change, right? So we're pretty much going to open where we close, so gap fill won't be an option. The question is, can we get above and sustain? My hope is that we can come back in and get a test of Globex lows, which would be a small rotation down. And my guess is there'll be responsive buyers somewhere between 1820.5 and 1818, somewhere in this area. And I'll just have to watch price action. Now, the question becomes from a trading standpoint, do you break your rules today, right, so that you can catch a trade when in most cases this will cause taking a 4-point rotation down or a 3-point rotation down will cause a loss. So the way I look at it is, because I don't consider any one trade or any one day more important than sticking to what works for me 99% of the time, right? What I'd really prefer if we opened 1823 would be a test of this 1818, 1816 level for a long, right? And that would give me a nice fat rotation to the downside, then a counter move up. What I'd look for if that happens, again, I doubt that it does, but if that does occur, excuse me, and that was yesterday's level, so let me see where today's level was real quick, and let's switch over to charts. I think I have to grab a cup of coffee before I start trading this morning. So if we look at today's level, we're opening at approximately, let's wind this out just a little bit. Okay, there's two white zones, by the way. If you'll notice, I almost never do that. It's because the overnight levels were so congested that I needed that. The important level here is this 1818.25 to, it should be 1816.25. If y'all will adjust that back just a drop to get it to 2 points. I apologize. And so the way that I'm treating that is, if you're a very aggressive trader, right? Again, this first move into Globex lows would be the first place that I would take a trade, but it's going to be a very tiny rotation into this area. And again, what determines whether I'll accept that, right, is normally I need a 2-point stop from behind. The problem with that is that's going to put you right into the white zone, right? So you have to be willing essentially to take, if you're going to take this level, you essentially have to be willing to take it all the way back to 2 points behind the zone, which makes this a very difficult trade right here. And really, for my more advanced traders, guys, I would base that on price action, and I'd want to see this thing, if it comes in, I would want to see it slingshot out of this area quickly. I would give it much more patience down here, again, because of the very tiny rotation. And for my newer traders, if you're considering taking here, what you have to consider is, Are you willing to take the loss versus missing the trade on a slow day where we should get a slow grind up, right? But what you're compromising is that if you take a loss, you might end up down on the day before Christmas, when normally on days like yesterday, we hit our two-point rotations every single morning, almost like clockwork, right? So consider whether that's worth the risk of taking it here. I may take it, but I would play it off of, if I take it, I'll be taking it off of price action, and I won't have a lot of patience here. I'll have plenty of patience here with a normal 2-point stop behind. As far as shorts go, I'm not looking very eagerly at shorts, right? Because the group that's clearly more aggressive right now are the buyers, particularly in NQ. They can just simply drag the ES up by its heels, and fighting that doesn't make any sense at this point. What I'd want to see, and I've gone over this with most of my clients again, right? What do we want to see for a break? And again, I'll point it out on the charts. I'd want to see us open here, break the white zone, probably come down into initial support, right? Which means we already have a rotation down of 1823.50. I'd want to see it bounce back up into the white zone, and I'd probably want to see tick divergence here to make the trade work back to the downside. The likelihood of this happening is almost zero. On the other side, the likelihood of having a trade look like the trade looking to the upside, and again, we're 1 minute to the open. I'm not in a big rush to trade this morning, so if y'all have to drop off, feel free. I'm going to keep going here. We have two options. Obviously, we can open and have an open drive up, right? So what are the characteristics of an open drive up? Generally speaking, in the first 15 minutes, the first 3 bars are green, and it looks like this. Okay, dun, dun, done. Okay, that is characteristic of an open drive. It's followed by a, if you look at the tick will generally be positive. We're probably going to open with a very neutral tick here, probably pretty close to plus. It's either going to be plus or minus 100 would be my guess. I'll have to look at it in a minute. And there we go. Hold on a second here. And then the other part of it will be rotations are very small. We've obviously already had gap fill, right? We're opening right where we closed yesterday, as you can see right here. So that's not an issue. The other issue is in order to have this, we'll get above gap, right? And then the rotations down tend to be very small, and we'll tend not to have a trend line break. The third piece in that, if you use it, is a VWAP. I don't use VWAP on my charts. I find it distracting. My entire approach is to use as few indicators as humanly possible and to trust the rotations in the market, right? If I was going to take a short today, I would not even consider a short until we're in initial resistance, and I probably want tick divergence at initial resistance. Again, the shorts can work, but thin markets, thin holiday markets can drive straight up or straight down in a painful manner, and I just don't want to take a loss. I'd rather wait till we get back and again see the market actually break. And if you see when the markets tend to break, even if you miss the initial break, right? Let's say everyone's talking about, well, this is a bubble, what have you. Well, this is what a bubble looks like, right? So first of all, the move up tends to get parabolic at the end, right? And when I say parabolic, go back and look at your oil charts when we were trading up at 112, and go back and look at the gold charts when we were trading. We traded essentially 1500 to 1900 in about 20 days, I believe was the period of time. I might be wrong on that, but I'm pretty sure, right? So what do those breakdowns look like? So let's say we somehow got to initial resistance. So what breakdowns look like is, and in the past, what would you have is you have a big up day. Hold on one second here. Okay, and hold on one second here. One of my brokers is hitting me, but I don't have any positions, so it can't be that important. So what it generally looks like is you have a big up day. That big up day tends to have a huge reversal on it to the downside. We get down below the day's lows and the prior day's lows, right? And then it tends to be followed through with a day or two of days that look like this, right? But they're all harshly down. And then we tend to have a recovery back up. And on that recovery back up, the following morning we'll tend to gap up. And generally speaking, on that gap up, if you can get a setup, that's when you start your move down. And generally, even once they break, they tend not to break in a straight line. Again, guys, if you have to jump off to trade, be my guest. I'm not overly eager to trade. If I don't get nothing, if I get no trades today, it's totally fine with me. I've had a good week. Last week was a great week, so I'm totally fine with it. I just don't want to push it on a day like today. I assume we're going to grind up. So hold on one second here. So what that looks like on a larger picture, right? Well, heck, since I'm talking about it, let's just pull up a blank chart on ES and see what that would look like. So generally the pattern that it'll follow, without going into too much on specifics, is it'll look like this. Okay, so let's say this is our blow off. The pattern that it'll generally look like, and again, this is very general. There's no specific entry on this, but it'll look like kind of like this. Up, blow off, down with closes like this. Okay, and then we'll tend to come up, do a little further down, up, a little further down, and we'll do this whole process about 3 times. And then eventually, after we go through this whole process, then on the 3rd time, we'll finally have a break underneath this level, and that's when the really hard fall off will come. But you got to understand the psychology behind it is that, first of all, people and a lot of investors, right, have missed a lot of this move. If we look at the levels below, right, so let's just crunch this up. If you're an investor and you're waiting for a pullback, right, there's almost no shorts. The first thing that's affecting this is people are going to want to try to buy back in, right? If you look at the chart quickly, we have to get below these levels to have any kind of breakdown, right? So that's a big reversal that we have to get down. Secondly, we haven't been able to get below 5% in over a year. So unless the behavior of the market changes dramatically, right, on each of these levels down, coming into areas of structure, right, there's going to be responsive buyers to push it back up, even if ultimately we're going to break, right? And the mistake that a lot of traders will make when they're trying to trade this is they'll go, oh, the market's going to break, it's a blow off top. And traders tend to get confused what their job is. Your job as a trader is not to be a fundamental analyst and say, well, we're going back to 1700. Because what can happen to you, right, is you go, I know we're going to break. You wait for the break. And you go, I'm going to make a killing. Let's say you get a plus 10 point or 12 point day and you go, this is it. And then what tends to happen is occasionally you'll hit a home run, but the majority of the time what happens is we come down, we find responsive buyers in these areas, and they push it all the way back up to where either you take a break-even trade or a loss. You entered here, and then you look, right, the following day, and we get one of these. If you approach it with the same levels and you pay respect to your proper rotation size and your proper loss management, right, no one trade will matter. And if you have a high odds trade setup, and when I say high odds, I mean 70 to 80% or better, right? You're hitting 7 to 8 out of 10 of your trades, and you have a reasonable stop loss. My particular stop loss is often inverted, but that's what ES demands in terms of making a profit, right, for me. So what happens in that process is that you can afford to take 1 or 2 stops, but if you use the proper rotations and you take your proper exits, you're not worried about whether this thing's going to go to zero, because as you're racking up your wins, you're simply consistently increasing your trade size over a series of trades. And I think that's what matters more from a day trading perspective, is being able to manage your risk and don't get into the business of trying to figure out where we're going to roll over or where we're going to go down. If you want great references, again, look at the oil market and look at the gold market, which has given a million great opportunities and a million great short entries long after it broke. You could have easily started shorting gold at 1800 and made a killing. You could have started shorting oil at 105 after it hit 112 and still made a killing. So that's all I have to say about the top callers. All of them have been wrong, and all of the easier trades have been from lower levels. Also, if you look at NQ, until you start seeing breaks of new lows and holding those lows, right? Lower highs, lower lows, even the weakness, if we go back and look at NQ, right? The intraday weakness was deceiving. Let's look at that. real quick just so everyone can see that. Well, hell, I'll just pull up again a new chart instead of trying to draw everything. And again, you'll notice we're breaking to new highs here. We're at 1824 and 3/4. NQ is breaking to new highs. There's no pullback, just like I feared. And so I don't chase higher. Again, I trade very, very leveraged, and I need to essentially ambush sellers and ambush buyers at the appropriate location. So I think very much, or I try to think from a military strategy, I want my opponents very stretched. I want them to essentially to outrun their supply lines, right, where I enter. And I want to essentially fight like a guerrilla. I want to come in, I want to strike quickly, I want to have minimal risk, and I want to get the hell out of there as quickly as possible. Of course, my version of getting the hell out of there is either taking my 2 points on my entire position, and or if I'm large enough, using a scaling strategy and moving my stops up to either break even or managing the trade so that the trade net will be a zero loser. I'll adjust the stop so that the profit that I take on the first portion of the trade will, if I get stopped, will end up as a net zero trade or a commission trade only if it comes back and stops me out, if I feel I'm at the appropriate location on those trades, right? The other thing that, I lost my train of thought. Oh, NQ, excuse me. Let's look at that really quick. If you look at NQ down here, let's go to a 15-minute chart. Okay, if we look at NQ in this area, if you look at the daily weakness, right, it looked like every day we were closing to the downside, right, with little spikes up here at the end of the day. But we repeatedly were closing, and I'll highlight this in case y'all can't see it. We're repeatedly closing near the lows of the day. All the way through this process, we were opening high and just selling off almost every single day through this entire process, right? Even when we were gapping up, we were getting sellers back at the end of the day. Okay, and everyone interpreted that, or many people interpreted that as selling weakness. But as I've pointed out before, and if we look closer, you'll see that, let me pull this in. Wow, I'm still not used to this new software. So guys, thanks for bearing with me on it. If we look further back, right? Okay, if we look further back, we never really broke below this level, and even in here when we got weak, right? This breakdown here was on, this was on Fed day, right? And we came down really quickly, and then we got right back above these levels. We essentially trapped all the weak hands here. Everyone who wanted out or was a weak hand got out and had to buy back in here. I really don't think this was a short squeeze. I don't think there's anything left to squeeze per se. And so this was deceiving here is what I want to point out. And what we would have wanted to see, right, for a breakdown is, again, this is what it would have looked like to a certain degree. Would have been, we would have broken below here, right? And we would have had repeated tests back up, right? Possibly. Or we just would have had a big flush down to this area somewhere in here, right? That's the next area of support. We would have come down in here. And then odds are we would have traced all the way back up either to here or right up to here and then broken down again, right? And so, the point of that was there would have been no need to chase this trade or to guess that the support level was going to break. And the second part of that, trade was that even though we were closing at lows, we never broke support through this entire period here. And so you got to keep your eye on the bigger picture, even if you're a day trader, and not get deceived by the intraday action. You need to keep an eye on the larger trade picture. And for right now, right, we don't have a short going until we get below this level, right? This would have these buyers trapped again up here. These guys, if we get underneath here, they're going to be trapped, and that would likely bring a trip all the way back to the other end of the range, but still not a breakdown until we get below this area. and I would look to be a responsive buyer on down days on all of this, expecting people to be responsive up here. They tend to not be responsive under two conditions, right? We can have an event occur, God forbid, a terrorist attack, but more likely it's going to would be a major company missing earnings, an unemployment issue, rising interest rate issue, meaning the Fed raises interest rates, which would be just jaw dropping. That would be beyond taper. I think it's going to take an event like that to really break us. That doesn't mean we can't have a market pullback, but I think that's what it would take to have a straight multiple down day, straight liquidation where we take off 2 or 3% in a week or a very short period of time. And you'll know it when it happens, and there'll still be good rotations in there to get your trades off. So anyways, that's what I wanted to cover. It is interesting. NQ's rolled all the way over now. We're actually down on the day in NQ. So we'll see where that goes. And you could end up actually having a trap trade in NQ. We can look at that on an intraday basis here real quick. Let me erase that. So let me see if I can find a NQ chart really quick. Here we go. So with ES, right, in order to get the trap trade, okay, we'll go to NQ. What the heck? Wow, people are still joining the meeting. Very interesting. Okay, so what would the trap trade look like on NQ? Let's widen this thing out and let's spread this thing out a little bit. Okay, so here is yesterday's high. Here is yesterday's close. Okay, so now that we're below those two things, and if we move this to a 5-minute chart, let's see here. We'll do this one more time. Yesterday's high print. Yesterday's closing print, roughly. Okay, so now we're back below that, right? Actually, we're just above by half a point. The close must have been right here. This must have been aftermarket, excuse me, so I stand corrected. This must have been the close right here. Ignore that. So what I'll want to see is that we trade back below the close, right? We hold, and then on this test, I want to see it reject. So we've gotten above the highs and we didn't hold, but we still haven't gotten and held below the close, right? So this could simply be a downside head fake. What we're going to have is a push below here, right? And hold below to get it going down. And again, I would not chase. Okay, so the risk is if you take the short here, right? Your stop has to be all the way up here. So go calculate that. That's approximately a 10-point move up, or $200 a contract if you take the trade here. The other way to look at that, right, is if we trap trade it, well, we could easily trade to the low of the day from yesterday, and same situation when we break below and we get back above. The problem with the trap trade is it's aggressive, and only that, you risk this move back to the upside. But once we get below here, the burden now is to get back above the high print and also the overnight high print. So anyways, I hope that helped a couple people. I'll actually be happy to, if y'all have some questions, I'm happy to answer them because I'm just not in too big a rush this morning. So let's see. Does anyone have any questions? You can hit the chat right here. There should be a chat on your screen. You're welcome to ask if you'd like. I'll give it another second. Brian, my plan for ES today. Generally speaking, hold on one second, let me jump over. Okay, so we've obviously rejected out of this zone. We just didn't have a significant enough rotation to come back down, right? What I'd hope for, let me see what the price action looks like here real quick. Keep an eye on it at least, right? So we still haven't gone negative. We are negative on the NQ, so I'd keep an eye on that. But again, there's no real flush yet, right? So I'd be, this time, if we get a roll down, 1824, still doesn't give us a very good rotation. Excuse me, still doesn't give us a very good rotation into the white zone. And what I probably want to see is this come down here, maybe with some tick divergence on it, right? And I would look for my 2-point rotation up. And then it really depends on what we do here. Again, part of the problem is there's not a lot of volume going through today. Almost no one's there. It's just going to be hard to imagine to get a push to the downside without responsive sellers. And you'll notice ES is getting hung up here. Right, we're really not having anyone respond forcefully. I don't think, let me see if there's any econ coming up. I should have checked, but again, I didn't really plan to do much trading today. Tuesday. We do have new home sales at 10 a.m., so that might be a catalyst to get a quick move one way or the other. But I just don't expect a lot. I'm going to keep an eye on NQ. If it really starts to roll over, it will pull ES down with it. But we're coming into new home sales here in just a minute. And again, I'm not just overly eager to do anything this morning. Primarily, Brian, I would stick with my 6-point rotations to 10-point rotations for trade entry, tick divergence. And if you don't get it, just let the day go. Missing one day is no big deal. And it's the day before Christmas. It tends to be traditionally, if you look over the past 5 years, it tends to be a bullish day or a sideways day, one of the two. And my guess is it's going to go dead between 10:30 and 2 o'clock. And we might get a, actually, do we close early today? Which is probably a really good question. I didn't even think about looking. Does anyone know, do we have an early close or is it a regular close today? Yes, 1:15. Great, thank you. So actually, we might get a flurry there at 1 o'clock, but who the heck wants to get trapped on a day like today? If you can figure out which way it's going, great. But like I said, my goal for those of you that are new in the room is basically it's the same basic trade as the fundamental of building an account. We get those 2-point trades over and over and over, increased trade size. That's how large institutional traders trade. And all these people talking about trying to get 10 points and 20 points. That's great if you can get it. But my experience has been the majority of traders are not masterful enough to be able to read the market and predict a 10 or 20 point move with regularity. And for every 10 point move they catch, they tend to give back half, if not all of it, trying to recapture it in other trades. But with 2-point trades, I can hit them regularly with very high odds, very consistently. And if I simply increase my trade size, on occasion I'll get a 10-point trade. Fantastic. That feels great when you do that. But I don't need it. I get 2 to 4 points regularly, and often my average on a good week will push up to 6 to 8 points when we're getting multiple opportunities through the course of the day. And just do the math, right? Take one contract, increase it every 10 trades you pull off successfully, right? Successful means following the rules. Increase those contracts and then do that over a period of time. Even if you start with one contract, in no time you'll be at 7, 8, 9, 10, 20 contracts very quickly over a period of months. And then years add up very quickly. And all of a sudden those 2 points turn into a lot of money. But what most small traders do is they look at it and they go, I've got a small account. I've either got to trade a lot so I can make it into a big account, right? Which blows them up. Or they say, I've got to hit a big trade on each of my trades. I've got to increase my trade by 10 or 20%. My account by 10 or 20%. Therefore, I'm going to constantly look for trades. It leads to over trading and it leads to losing a lot of money, paying a ton of commissions. Your brokers love you. And that's why on a retail basis, 70% of 70 to 80% actually those accounts end up closing within 12 months. They just can't sustain that activity. So my goal in doing this is to change that, not on a mass scale, but for a few people who want to change it and want to make profits with their accounts. That's what my goal is here. It can be done. I've traded other traders who've worked for me when I had a hedge fund, and it can be done. So, and I'm not the only one who knows how to do it. There's other sources, but I would recommend, instead of trying to overtrade your account, or trying to hit home runs every time, find a high odds system and then learn to trust that. There's methods that you can do that, because half the battle is psychological. Anyways, that's what I got, guys. I don't. We'll have more once the data comes out here in a minute, and it's an early close. There's no sellers so far in ES, and NQ is barely down. So maybe after the housing data in 8 minutes, we'll see some more. Anyways, that's it. I'm out. Let me see if there's any other questions here real quick. Anyone have any questions? Sure, my pleasure. Thank you, Andy. Okay, guys, have a great. Hey, my pleasure, everyone. And remember, guys, it's not about any one trade. It's not about any one day. You just string them all together, and you'll make a shitload of money. And anybody can do it. So, talk to you later, guys. Have a great day.